Jayalakshmi, Lavanya, Manan.
Yes, sir.
Neelakandan, Nimoy. Nupur.
Yes, sir.
Pallavi.
Yes, sir.
Pallavi.
Present, sir.
Pallavi.
Yes, sir.
Rashtra. Parul.
Yes, sir.
Pooja.
Yes, sir.
Prachi. Prakar. Light. Prati. Pushkal. Radhika. Botar. Madhuri.
Yes, sir. For both.
Botar.
Yes, sir.
Sagan. Sahaj. Sakhi.
Yes, sir.
Sakshi.
Yes, sir.
Samhita.
Yes, sir.
Sarthak.
Yes, sir.
Sharwari.
Yes, sir.
Ramya.
Present, sir.
Shivani.
Yes, sir.
Shraddha.
Present, sir.
Shruti.
Yes, sir.
Simran.
Yes, sir.
Samrit. Sonali.
Present, sir.
Sulakshan. Surabhi.
Present, sir.
Ritti.
Present, sir.
Tarun. Trisha.
Both
Botas. Vanshaj.
Yes, sir.
Varnika. Botas. Sakina. Vishwajit.
Present, sir.
Yashna. Sonali. Animesh. Dhruv. Ashantan. John. Anushka. Ashwani. Garima. Harshad. Nasran. Shreyas.
Yes, sir.
Jameson. Asta. Abhilasha. Aishwarya. Anirudh. Arvind. Ashwin. Gautam. Lalit.
Yes, sir.
Lavanya. Meghana.
Yes, sir.
Revati.
Both are, sir.
Sikandar.
Present, sir.
Sneha. Manu.
Yes, sir.
Yartan. Anumeha. Akshat. Agarwal.
Yes, sir.
Botas.
Yes, sir.
Akshat Gautam.
Present, sir.
Aman. Botas. Anhan.
Present, sir.
Annie. Darren.
Kindly assemble at 11 o'clock in the choir to pay our homage to one of the greatest sons of Mother Earth, who wanted to ignite many more minds, but who was ordained to complete his voyage on this planet. For 5 minutes, we will have the homage paying, and then a condolence resolution will be passed, and then we will resume our normal activities. Thank you.
This is why I took the double roll call now. They don't have have to apply to it. So then, the double roll call meaning that I took attendance twice rather than asking you guys to come in later. So no attendance will be given for late comers in this class.
Don't put on my side, no? Put some.
Yeah, so just a quick recap. So essentially what's happening is that normally liabilities are not included when they come in. So the short answer is why liabilities don't affect, one quick and short answer is liabilities don't affect the profit and loss account or income statement when they come in. The reason why they don't affect the income statement is because they are not income in the first place. And therefore, if you don't record them when they are coming in, why would you record them when they are going out? Because if you just record them one way in, and you don't record them on the way out or vice versa, if you don't record them on the way in and you record them when they are going out, obviously your income will be distorted. Do you guys agree? That's another way of explaining why liabilities are not shown in the income statement. Everyone agrees that liabilities should not be shown when they come in as income. Is there anybody who disagrees with this principle? Liabilities, when they come in, they are not income, right? Why are they not income? Because they are a loan, right? Can you treat a loan as an income? Yes or no? Loudly, everyone? Everyone who says it should not be treated as an income? No? Sinmay, you think it's a yes or a no? Liability, when it comes in, do you think it should be treated as income? So say it. No, okay. Everyone say no, allowed, because I think the class is a So if a liability should not be treated as an income when it comes in, should it be treated as an expenditure when it goes out?
No.
Yes or no? No. So liability normally doesn't affect the income and expenditure statement. So if it doesn't affect the income and expenditure statement, what it does is, I have a balance sheet here where I am showing as 100 rupees due to X, and suddenly this vanishes. Right? Normally when this vanishes, I have something known as an asset to counterbalance it here, which is the cash. So that also vanishes. So therefore my balance sheet remains balanced. But when it vanishes without a trace because I have not paid X, then there is an imbalance because my cash still remains. So what do? I increase, in addition to liabilities, on the liability side, you have both equities as well as loan. So what I am saying here is, normally when your loan goes down, your cash balance also goes down because you pay the loan. And nothing else is affected because we have agreed that liabilities don't affect your income statement. So since you can't bring down cash, what you do is, you increase equity, not income initially. I'm just pointing out. You will increase income also, but you show it as equity. But if you just show an increase in equity, someone can ask you questions as to how equity has increased when there is no fresh infusion of capital. How is equity increased? Equity is increased when people contribute to the share capital. When you put in monies, if you have 100 rupees as share capital, and suddenly one fine day in the next year's balance sheet it shows as 110 rupees, anyone will ask you as to why 100 rupees has become 110 when there has been no share issuance. Can there be an increase in equity share capital without share issuance? No, right? So the explanation which you give, remember when I say equity, I am also not talking just about companies, which is a far more complicated structure, but I normally have in mind a partnership. Because a partnership doesn't require all of these complications of when you can issue shares, when you can withdraw shares. In a partnership, you have a similar concept like a company, that is there are shares in the business, but it's just shown as a capital account, and it's just an accounting entry. You want to give shares to someone, you just credit his capital account, and when you want to remove his shares, you just debit his capital account. So in this case, if someone asks me why you have credited the capital account, what I normally do is, I don't need to do it. I can just pass an entry which debits my loan account and credits my equity account. When I say debit, I mean reduce my loan account. I'll avoid using the word debit and credit. I can just reduce my loan account and I can just increase my equity account. But for convenience, I can also pass it through the income statement and I say I have received some income, so I reduce the loan account and I increase my income, and I use this income to increase my equity. So when someone asks me a question as to why my equity has suddenly jumped from 100 rupees to 105 or 110 this year without there being any fresh infusion of capital, I show them that my income has increased. But when I show them that my income has increased, what's the problem?
Tax.
You have to pay tax on it, right? Because the tax guy is going to say, I am very happy that your income has increased this year, so please pay tax on it. So the question arises whether you can, in any case or any kind of a situation, say that tax is not payable in this increase in income, right? So one way in which you can avoid paying tax is our good old friend of capital receipt and revenue receipt. Is it possible for you to argue that when a loan is written off, in certain cases, it's a capital receipt? Because we have now, like I hope you guys have understood that when a loan is written off, in order to explain it as an increase in equity, you say there is an increase in income. That written off portion, you take it as income. Is there any way in which you can call a loan which is written off as a capital receipt or a revenue receipt? Because if you can explain that a loan which is written off is a capital receipt, you can have your cake and eat it too. Which is to say, you can show that your income has increased, but avoid paying tax on it. But if you come to the unfortunate conclusion that it's a revenue receipt, then you can have your cake but pay for it. That is the only difference. So I don't think you can answer these questions in the abstract. So let's consider some situations when you might consider it as a capital receipt or a revenue receipt. So consider the situation
Capital or revenue.
when
If it's revenue, you have to pay tax on it.
when consider this guy
You have to pass it
who
through
conducts
tax
auctions.
account and say capital is designated.
Okay, he conducts, in particular, he auctions horses.
Yeah. No, even if it's
So what happens
still
is,
may not have to pay
a
tax.
person who
Just
wants
pay
to
your
sell a
tax
horse,
bringing it.
let's say X, comes and gives his horse to this auctioneer, let's call him Y. And this auctioneer sells it to somebody Z, who in turn gives him the sale proceeds. Now these sale proceeds, there are two portions. He retains a commission and the balance he keeps it in trust. Let's say he has an agreement with this X to say, I will sell your horses, I will deduct a commission and I will refund the balance to you. So now this balance which he is keeping in trust is repayable only when X makes a demand and not until then. He is not going to go and tell X, please take your money, please take your money. He tells X in the agreement that I will intimate you when the horse is sold, and then as and when you come over to collect the proceeds, I will pay you the proceeds immediately. But the proceeds are not payable on the date. This is an important point. Proceeds are not one of the important points. The proceeds are not payable on the date when the horses are sold. They become payable when X comes and makes a demand and says, you have intimated to me you have sold my horse, so please pay me the sale proceeds. So first question here is, this balance, how will it be recorded in Y's books? Will it be shown as a liability or not?
Yes.
How many people say yes? Who said yes? In Y's books. The auctioneer. This guy is the auctioneer. This guy is the owner of the horse. This guy is the purchaser. We are focusing only on the auctioneer. The auctioneer has sale proceeds. These sale proceeds, there are two portions. One portion is the commission. That I am not concerned with. When the sale proceeds come, he deducts the commission. And the balance which is there is the sale proceeds themselves. Whatever is the profit plus the cost of acquisition of the horse. I mean, why should I complicate it? Basically, it's the profits which X has made. So in Y's books, my first question is, what will this balance amount be shown in Y's book? Will it be shown as income? Can you show it as his income?
No.
No, why not?
He has to pay.
Because he has to pay. But has he taken a loan from X?
No.
Has he taken a loan? He's not taken a loan, right? So the first point which you should appreciate is the liability figure doesn't reflect only loans. It can be any miscellaneous amount. The liability side of a balance sheet can have any miscellaneous amount which is not an asset of the business but which needs to be paid back to someone else. So in this case, you have this balance amount which he needs to pay back. Now let us say that X doesn't come and collect that amount for whatever reason. Maybe he has more pressing things to do, and therefore he doesn't come for, let's say, 6 years or 7 years or 8 years. Then in the 9th year he comes and he says, I sold a horse 9 years or 10 years ago through you. So can you please pay me the balance of the proceeds after deducting your commission? Can he claim it? Would limitation apply? I don't know, even I would normally think that the limitation would apply, but in this case what they said is until he makes a demand, limitation doesn't start running. Because what the contract says in this case is that as and when you come and ask me for the sale proceeds, I will pay you. And if he doesn't pay you on the day you go and ask him for the sale proceeds, does your limitation period start running from that day or an earlier day?
Since the time you asked for the money.
But what about the fact that it's a contractual right? When does a contractual right to claim it, when does it arise? You get a right to claim as soon as you intimate the demand, right? As soon as he intimates a demand to you. You get a right to go and claim it against the auctioneer as soon as he says that your horse has been sold. So you have not gone and asked him for that particular portion of the sale proceeds. Anyway, that's a Limitation Act question. So, but let's assume for the time being that the limitation period only starts running from the date you actually make a demand. So this is one situation. So this situation, so when you go and make a demand, then he has to pay it you. If you don't make a demand, maybe after 3 or 4 years, you even forget that you sold the horse through him, and so therefore you don't go and collect the sale proceeds from him. Can or should Y be taxed on this amount as his income? Maybe he passes it through the profit and loss account, but as I pointed out to you, passing it through the profit and loss account is merely a matter of convenience. You just want to give an explanation as to why your equity has increased that year. It's not mandatory. If you want, you can just directly increase your equity by passing an entry. But accountants being accountants, they have thousands of incomings and outgoings. They are not going to sit and analyze like lawyers do as to whether it's going to be a capital receipt or a revenue receipt. They are going to just simply transfer it to the income statement, explain why the income, why the equity has gone up by showing it to the income statement. But do you think there is any argument to make here that it's a capital receipt or a revenue receipt? Either ways. Nothing. I'll take that as a I don't know instead of a yes or no. I'll go on to a next kind of a situation. Yeah.
With respect to transferring it to profit and loss account,
Yeah.
this question also relates to the last example.
Okay.
He said that it can be counted as income and yet there can be one way through which we won't have to pay tax.
Which is by showing it's a capital receipt.
Which is
Because see, I'm saying just because you show it in your income statement and profit and loss account statement, it doesn't mean it's a revenue receipt. It is one of the factors. If you show something, so Aradhya's question is, if you have, essentially I'm reformulating this question, if you have shown it in your profit and loss statement, isn't it income? So the answer is no, not necessarily. You might show showing something in your profit and loss account is just a matter of making an entry. Anyone